Sell everything now. I'm your host, Steve Van Metre, and thanks for joining me today. And in last week's show, we featured a report from Goldman Sachs that said the machines were about to unleash a huge wave of selling if a certain trigger point was met. Well, that trigger point has now been met. We've got an update from Goldman that shows just how close these machines are to selling a huge amount of stocks. Plus, they're not just saying stocks and machines are now set to sell. It's, well, everything. Let's head over to the Goldman desk where we pick today's story up, and then we'll get into the technicals and momentum of the market as we do every Sunday. Let's start with a tactical flow of funds report. This just released the other day. The CTA's non-economic equity supply, their model sellers in 5 out of 6 scenarios. So this was the flip day. Now remember, we told you last week that the point of no return was 4,000 on the S&P. Of course, it crossed below that, and that's, of course, what Goldman notes that their midterm threshold is around 4,000. 3.5 on the S&P. It broke that level. Look at this. Over the next week, if stocks hold their current level, that's what a flat tape means, just kind of trade sideways. They're only selling 16 billion, but notably 14.7 of that is coming out of the S&P, and an up tape, not big buyers here. They're actually sellers if the market goes up 4.6 billion, and a down tape 61 billion to sell over the next week, which is 23.3 billion coming in out of the S&P. So what I want you to understand is when you look at how these machines are positioned, when they're in a point where they've made a gain, they start to look to cover that gain, sell out positions, and change as momentum heads lower. And that's what you see over this next week. Now let's look at the monthly numbers, because these get really ugly. In a flat tape, there's big sellers, 33.8 billion out of that, 20.5 in the S&P. Up tape, 24 billion to buy. So there is, over the month, if there is a change here, that's where they're going to do it. But look at this, in a down tape, 219 billion to sell. That's global equities, 40.6 billion of that selling the S&P. You want to see something that drives the market down? Well, here is the chart version of what we just went through. Here you can see in an up tape, you do see a minor amount of buying, but look at these big moves down, that if the market goes, the machines are going to sell. And here's this rolling 10-day positioning, and this is a great chart because it just shows you that the machines are doing what most investors should do. When they make a gain, they start to capture it as momentum shifts, and then they move to the other direction. And of course, we've got our report, CTA Timer Pro, which mimics that, and we'll get into that a little bit more. And I want to show you, for those who have not yet subscribed or been thinking about it, just how great that report is mimicking what you're seeing here from Goldman, Nomura, and TD Securities as we get into that. How about for month end? Goldman also notes there's going to be some pension rebalancing, and they're saying this is $7 billion for sale prior to the sell-off. This is a mega one. They say will be the March quarter end. $3 billion to sell, ranks in the 25th percentile of absolute dollar value. So they're noting there's further selling as we head into the end of next month. Of course, we're not there yet, but they're kind of just giving you an advance warning that that's what's coming. How about the corporate buybacks? Now they note that the authorizations are record high year to date, 223 billion. But many of you said in the comments before, hey, I don't care what they're saying, I don't think they're going to buy it. Well, if you said that, you're right. The executions are actually pretty low, down 30% year over year. So that's not helping putting a floor under the market. Now let's take a look at Nomura. We know that they are max short. They're a very, very fast algorithm on the S&P 500. If you're new to the show and you're wondering why this slide's blurred out, well, I don't have permission for them to show it. It's proprietary information in terms of their machine modeling. You see the ones that are green, there's a few that are still long the market, but that's going to change soon. TD Securities, they are starting to move down. We see some red arrows here. They were only slightly long, and now they're starting to shift back. So we're seeing some indication of what I told you is going to happen. And here, this slide, this was here last week. What did I say? 4,000 to sell in the S&P, and lo and behold, what are we starting to see? All the news from these CTA providers, these machine managed programs are saying, hey, we're going to start selling unless the market gets something underneath it. What could that be? Well, we're going to get into that in a moment. What the one thing you should be watching that may hold the market up, and we'll see if those buyers step in. But now let's get into the technical momentum here of the S&P 500. We'll get into the NASDAQ bond market, of course, gold and whatnot after that as usual. Here we see the S&P 500 largest traded ETF SPY. Momentum is negative. The RSI is at 42. Now, if RSI above 40 is positive, that means momentum is to the upside, but the trend on the RSI is to the downside, suggesting that this is not likely to hold much longer. The MACD has front run that with a negative cross to the downside. For those of you who are new to this, is a moving average convergence divergence strategy, very popular among traders. Our own internal report, Momentum Timer Pro, which attempts to smooth out the RSI, the MACD, and then one of our own proprietary signals, has 4 consecutive daily sell signals. That's what we see down here on the bottom. There's a coupon code for that report right now for half off at $60 a month. Comes with some stuff from Jeff Snyder and Tracy shoe chart, so we're taking a look at. Friday's closing 396.38. I want to point out we called the downside target 392.76. It got really close to that. We're moving that number down. Upside target we're putting down, moving it down to 408. Look at the machine positioning. This is from CTA Timer Pro. I added a few more to the coupon code so those who want to grab it, but notably it's already telling you, it's been telling subscribers 15% short on the fast algorithm here, and we see the long algorithm is backing off just as Goldman is suggesting here. So it's giving you a good picture of what the machines are doing. Now let's take a look at the charts here. And this is the S&P 500. Now, I've got it out on the 1-year chart. We notice there's a lot of volume profile here, a lot of buyers below that line, a lot of sellers above it. There's a 200-day moving average. Now, if this holds or holds somewhere just below it and then rallies back above it, that is a bullish signal. That's something, if you're trading this market, you want to be in it. But notably, we see the RSI trending lower. We see the MACD looking like it's heading down. Where could this go? If we see the machine selling over the next month, going into that March month-end pension rebalancing, don't be surprised if it comes all the way back down into, say, this 372.41 range, somewhere below that. If you see that happen, there is your confirmation and a rally off of that. There's your massive inverse head and shoulders pattern. For now, watch the 200-day moving average. If this sticks, if this brings buyers back in and it rallies up, breaks the neckline, look to chase that higher. All right, let's get over to the QQQ. Of course, we got tech stocks. Momentum negative, no surprise there. RSI trending down. We'll look at that. MACD negative cross. Momentum Timer Pro flagging 3 consecutive days of sell signals, giving you some indication because overall the longer-term signals are pretty bullish, but the shorter-term signals have flipped. We notably the machines, our CTA Timer Pro, backing off. You see it's selling off his long positions down to 15% on Friday. It's still max long on the slower algorithm, but look again for this to change. We're now suggesting no position on this or the S&P 500. I want to mention last week we did put on a report that you should tighten up your stops, exit your positions if that was an opportunity for you. If you're not seeing it, if you didn't see it after yesterday, that show on Sunday as a warning sign, well, I hope you do now. But if you've got some gains, it's time to put those in the bank. All right, let's take a look at what we see, where this is headed. Upside target 301. We're moving our downside target down. We got close there at that 289 level. Let's see here. Where did we get to? Yeah, 290. Came all the way down to around, let's see, 290 there. Tagged the bottom or top end of the 200-day moving average. Again, right now, this is key. If the market holds this 200-day moving average, even if the NASDAQ here comes down to the volume profile line, bounces up, crosses through the 200-day again to the upside, that's extremely bullish. The market will see it. If we see a big sell-off, look for this thing to come back down here to this 262 level over the next month would kind of be my guess. But you'll notice the RSI is trending lower. The MACD is headed lower. People are going to look to sell this. If the machines follow suit, it will drive it lower. All right, let's take a look at the bond market because we mentioned in the beginning of the show that now Goldman says everything's for sale. And of course, the CTAs say yes. What did we talked about on the show? The momentum on bonds has flipped negative here. The flow has gone negative. And now we're seeing this from Goldman. Global bonds, $21 billion for sale over the flat tape over the next week, $54 billion over the next month. Now, these aren't huge numbers, but they look pretty big. They're just saying that the base case here is bonds are selling. We know Nomura's are maxed out short on their end. TD Securities adding back to their short positions on their side. And what have we noted last week? I think this has been there for a couple weeks, that any rally in price has triggered a short covering. Let's take a look at TLT now. And what do we see? Momentum is negative. RSI 39, of course, we're getting close to oversold territory here. We may see that over the next week, which could be good news from a tactical perspective. MACD's got a negative cross. Momentum Time Pro, 13 consecutive days sell signals. But look at CTA Time Pro. It's been telling you, and it told you weeks ago to, hey, if you're in the bond market and you're a trader, you need to cover those positions. This thing is going down. It called that. Look, if you want to know when to add to positions and you're a subscriber, wait for this thing to flip from 100% short and buy off of this level. That gives you a great indicator. Broadly speaking, if you're a longer term investor, wait for a close over the 200-day moving average. Don't be in a rush. There's a lot of upside in the bond market to come, particularly when everyone, including the Fed, realizes the economy is not in that great shape. Where could this go? We could see some selling down here to around this 99.48 level. Is it likely to retouch this low? Maybe. I mean, it just depends on if we get a big enough wave of selling, what the economic news is. Could we get down here to 97.49? Again, if you're looking to take a big position at this point, hold off until this thing crosses the 200-day moving average, because look at this 1 year bar here. You've got a massive amount of buyers below here looking to buy this, number of sellers above this. So you've got a lot of things going on there. The RSI is trying to get down to oversold territory and try to bottom out. You notice the MACD is starting to flatten out here, so giving us some indication that perhaps better days for the bond market are coming. Let's talk about gold. You know, we were pretty bullish on gold and machines. Again, we watched momentum slow down. We told you the machines would start to sell it if they did. Now we're seeing them back off this from TD Securities. You need to see a move over 1825 before buying. Under 1750, watch out below. Here we see momentum again. You notice a kind of trend here. Momentum is negative, 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 negative. It's across the whole market here. We notice gold RSI is down at 40. MACD, negative cross. Momentum time referral, 14 consecutive daily sell signals. So if you didn't know when to get out, we kind of told you on the show, tighten up your stops. We told our pro subscribers to do that. Upside targets at 175, downside target 163. But look at our CTA Timer Pro. It told you 100% short on the fast algorithm. It nailed it. And now it's saying, look, if this thing continues to go, the longer term algorithm, the slower, longer term algorithm, it's now moving into a short and selling position. So it's telling you everything you need to know. Let's take a look here at GLD. And what do we see? Momentum slowed down right there at the 1 year volume profile. We warned everybody, capture your gains off that move, and now look, it's coming down. 200-day moving average, perhaps an area of support here. We note that the RSI is getting near oversold territory. We see the MACD is getting down there in oversold territory too. So a lot of opportunity coming there for that. How about we look real quick at GDX? We again see this thing as being massively oversold. Perhaps this is the trade you're looking for. And what do we note? The CTA Time Pro, it runs the algorithm. Now again, machines don't trade ETFs, but we ran the algorithm over them so you would know how they would trade the ETFs. Again, a real valuable report. Again, there's currently a few coupon codes left at the $10 off mark. So grab that while you can. Let's take a look at GDX. Where is this thing headed? Look at that volume support at 1 year. This thing comes crashing down into there, broke through the 200-day moving average. If you're looking to take a position here, hang tight. You may get a great one right around this 24.75 or just below that. Of course, we'll keep following that in our future shows and on our reports. How about the dollar? Dollar is rallying. We called the dollar rally. Our report said this was going to happen. It did. And now what do we see here? RSI is at overbought territory at 70. MACD at a positive cross. 15 consecutive daily buy signals on Momentum Timer Pro. So if you're trading the dailies, you got that right. Upside target at 28.67. I'll show you what that is. Look at our CTA Timer Pro. Remember when it was max short on across the board and it started flipping and I said, hey, look, this is going to happen. It's going to rally. And sure enough, what did you see? It did exactly that. Let's take a look at UUP. Where do we see maybe catching into the upside here of this downtrending 100-day moving average? Buyers are coming in below. If it breaks above the 200-day moving average, it's got some potential upside. On the DXY, you're looking at right around, let's see, 106.44. Look for that to be the first sign of resistance, as sellers, of course, are going to come in and try to defend that 200-day moving average. They tend to like that as a defensive point, but you can see another rally here in the dollar that's going to be bearish for equities, bearish, of course, for gold, bearish for bonds. You're seeing the setup here. Maybe the trigger point is the dollar. But if the dollar holds up and the market doesn't get its foot under, get some for a floor underneath it, well, over the next month, you're going to see the machines do a whole lot of selling. And with that, I'm Steve Van Metre. Thanks for watching. Thanks for being fans. Bye now.